So I've been really happy transitioning to doing vlogs, but I've had a lot of people ask me about the real estate market and what the strategy is now with higher interest rates and, you know, the market being a lot softer, things are sitting on the market, days on market's increasing. Like, what am I personally doing with my company? Well, it's hard to break that down in a vlog, so I'm just gonna give you my thoughts and ideas right here raw. So I just did a call recently with my students telling them what my plan was for this market as it shifts, because undeniably the last even month the market has changed dramatically. And so even though I predict that the market is going to be fine and I think that interest rates at some point are going to go down, I do think that these next 4 to 6 months are going to be pretty rough for flippers, especially because properties are sitting on the market longer. And, you know, you're gonna have to appeal to the buyers way more. You're gonna have to give them repair credits. You're gonna have to do your flips better. You're gonna have to give them closing costs, all these things that we haven't had to do for years. So I wanted to go in depth with them on what my strategy is right now when times are a little bit harder than they've been. And I figured it's probably a pretty good YouTube video to share with you guys on kind of what those thoughts are too, in just like a much quicker way. So that being said, I mean, here are my thoughts. Right now, the market is slower, like I said. One thing I always watch is the inventory. And so every day I am tracking the inventory here in Las Vegas. And you know, one thing to know with inventory, it is something that is very local, okay? What I have here in Vegas is gonna be different than wherever you're at. And so if I say that our inventory is going up a lot, that's true here, but it might not be true where you're at. So always track your inventory in your market. Now, with inventory, if you don't know what it is, it's simply taking the active amount of homes that are listed, that's essentially all the homes listed, divided by the number of homes sold in the last 30 days, okay? And so if you have, say, 9,000 homes for sale right now and 3,000 sold in the last 30 days, that would mean there are 3 months of inventory. That's 9,000 divided by 3,000. And 3 months is good, okay? For the last 2 years, we've been anywhere from like half a month to a month and a half in Vegas, which is just an extreme seller's market. That means you could throw anything on the market, doesn't matter how good the flip is, doesn't matter, you don't have to pay any repair costs, you demand them to pay over appraisal, they don't have a choice, they gotta pay it because it's an extreme seller's market. And I would say anything under 3 months is considered a seller's market. Now, once you get into the 3 to 4 month territory, it's now starting to transition into a neutral and now buyer's market. You know, 3 months, let's just call it neutral. 4 months, you're like, okay, we're starting to get into buyer's market territory. You know, and then once you get into 5 to 6 months, you're really in buyer's market. Like, as a seller, you're gonna have to be super competitively priced and you are going to have to give the buyer anything and everything they want, expect to get lowballed because they have a lot of different options, okay? Now, being at 3 to 4 months does not mean like the real estate prices are gonna crash or anything. In fact, 3 to 4 months would typically mean prices are gonna probably remain pretty stable. They're not going up or down. And this is like what it was early in my career. I would say around 2015, 2016, when I first started flipping houses, we were always around 3 to 4 months. And you know, every time I underwrote a deal, I didn't expect that it was gonna appreciate and be worth all this money. And so that's kind of where we're at today. But here's the problem. As I've been tracking our inventory, you know, even when I first started making videos saying we are not in a buyer's market, it was true. At the time, we might have had 1 to 2 months of inventory, right? It doubled from half a month to a month and then a month to 2 months. But still, even at that level, we were selling a lot of houses and that's, you know, not considered a buyer's market. Well, you know, that slowly became 3 months, which still didn't concern me. You know, it's still neutral. But then that 3 months turned to 4 months. Now at that point, you know, I'm like, hey, this is starting to become a buyer's market now and it's still not stopping. Like, when is this gonna stop? And for us here in Vegas, by my calculations as of the time of filming this, we are now hovering between 4 to 5 months, okay? And I've seen it go almost hitting 5 months to dropping back down to like 4.5, 4.25, you know, you get the idea. And so we're definitely in a different market. Things are going to be a lot slower and I don't anticipate them changing at all, especially since we're going into the winter and, you know, they're not talking about lowering rates. Like, I was really optimistic they would lower rates by the end of this year. That was my prediction. You know, I hope that it happens. Like, I think it could still happen, but I am no longer like predicting or saying, oh, you know, this is for certain they're gonna drop. Like, I don't know what this administration is gonna do. I know a lot of people are pissed at Biden for various reasons, and it is what it is. Like, I'm not going to get mad at him, but obviously the things we're doing now are not helping, real estate investors. Stocks are getting crushed. Businesses are having to lay people off. It's not good, right? It's why we're technically in a recession, but they say we're not in a recession. The White House and Biden will have you believe we're not, when technically we are. So, long story short, politics aside, whatever side you believe, just look at data. And the data is we are moving into a buyer's market. Now, what does that mean if you are an investor, a flipper, a wholesaler, a buy and hold guy? Well, I'll tell you my strategy. I've personally been looking at rebuilding my company for the last 6 months, way before it ever became a buyer's market, into a mainly wholesale company. Okay, I have gotten tired of, predominantly house flipping. I've been doing, around 100 flips a year, like actual us buying and selling them and, fixing them up and all that stuff. And it's great, but it's hard to scale past 100 because you got to go get way more contractors. If I want to go flip 300 homes, I got to get triple the contractor force. And finding contractors right now is really hard at scale. I also have to go raise 3 times the amount of money. I take 3 times the amount of risk with all these hard money loans and private loans. And so overall, I just look at it and I'm like, I don't want to scale to 300 flips. I'd rather work on my other businesses that have less risk than that. So that's why I haven't tried to really scale my house flipping business bigger than it's been. It's been kind of consistent. Now our profit margins have increased because the market's gone up, but it's not really that we're doing anything different. It's just, we're beneficiaries of the market. Now, for me, I've wanted to scale the business as a wholesale business because if we go and get 300 wholesales, if we can get a deal a day, that's way easier to scale because we don't need the contractors. We don't need the cash. All we got to do is just get better at marketing and sales and just finding those deals and finding buyers to sell those deals too. And so that's what we've been doing. And as I said, this has happened way before the market shift. My students, I've been telling them this for the last 6 months. This has been my plan. And we're now, executing that plan. And, we've got new shifts for our employees. We've got more marketing spend. We've got a new CRM that we're using with Salesforce. Like, we're building it out as a, wholesale company. But here's the deal. We are still always going to flip, right? But maybe instead of doing, say, 100 flips, we want to do maybe 50 flips. And we want to do, 200 wholesales. And I want to also take down 50 rentals. Like, that's kind of the spread I would like to go if we did 300 deals, just call it, right? And so that's kind of where we're at, is we're finding deals. Right now, it is harder to get people to buy those deals as a wholesaler, right? People are lowballing because everyone's scared of the market. And, this is very similar to what we saw in COVID, by the way. Everybody was super scared, so, nobody wanted to buy houses. The investors were scared. But, on the other side, the hard part is the home sellers don't think the market's crashing, right? They're not scared as much. They're more optimistic. And so they're hanging firm on like prices they want. So it's harder to create a spread at this very point in time because investors don't want to buy and home sellers they don't think the market's as bad as investors might think the market is, right? So it's harder to do business when not everyone's on the same page. And I said this back in 2020 to my team during COVID that, it's easier when everybody thinks everything is going the same way. If everyone thinks the market's hot, sellers and investors included, it's easier to do a deal because we're on the same page. But when one side thinks the market's doing this and the other side thinks the market's doing that, it makes it really hard. And so it was harder in COVID, but the people that won in COVID were the people that ended up buying, okay? The people who bought those deals, as long as they were able to get through the few months of COVID, ended up winning big, okay? The people who bought in 2010, after the crash, they ended up winning big, even though there wasn't a lot of buyers. There was a ton of deals out there, but there was very few people willing to buy. And so the moral of that story is whenever you're in this situation where everyone else around you is scared, you got to realize that's the time to buy, okay? It's like almost every single time that has been the time. Now, it doesn't mean that you have to flip, okay? Because, whenever you flip and you take on short-term debt, it is, riskier, right? If you can wholesale it and make, $10,000 and you're not in a position where you can flip a lot of houses, well, the 10,000's fine, even though 6 months ago you would have made 30,000, right? Just because the buyers are offering less because they're scared and they want a bigger discount because there's less competition. Totally understandable. For me, Instead of wholesaling it though, for this $5,000 to $10,000, I would rather just keep it. And here's the reason why. If let's just say hypothetically, get a house that's $500,000, right? I could wholesale it, make $10,000. I could flip it, and who knows what happens with the market, right? There's unknown, but maybe today it looks like it might make $40,000, right? Maybe I don't want to take that risk because I have too many other flips out there. Well, the better thing to do for me anyways, if this is in a great area that I want to hold long term, the better play for me is to just keep it as a rental. And here's why. Because I am getting it at such a better discount, I'm going to be able to use the BRRRR strategy on that house down the road and go get it fixed up, refinance it, rent it out, all that stuff, and then get all my money back out of it, right? So my money's back out. But two things happen. One is, obviously I got a good deal on it, so maybe I've increased my net worth by $100,000. Like, that's great. I'm putting assets on the balance sheet. But I'm actually making more money than had I wholesaled it because of the depreciation. So if I were to take this $500,000 home and do a cost segregation on it and depreciate it, basically I could take a huge write-off in year one. Now that write-off will vary, but I mean, in this scenario, it could be anywhere from $100,000 to $150,000 in write-off, okay? And so for easy numbers, let's just go conservative and say it's $100,000. Well, that $100,000, I can take 40% of that because that's, the tax bracket I'm gonna be in. So if I take 40%, because that's what I would have paid in taxes, that basically saved me $40,000 in taxes I would have paid. So think about it. I could wholesale it, make $10,000 in cash today, and then I don't own the house and it's gone. Or I just take it down and buy it. I hold in the long run because I know in the long run, regardless of what the market's doing today, the next 5-10 years, that house is gonna be worth a lot of money. Probably gonna be worth double, maybe more, right? And so my net worth increases, but even in today's game, I'm gonna save $40,000 in taxes I would have already paid. So, at this point, for me, if people don't wanna pay our price with wholesaling, as long as the property is something I wanna put in my portfolio long-term, it's in an A or B class area here in Vegas, I'm keeping it. Like, it doesn't even matter if it cash flows or not. For me personally, I'm not saying that all of you should buy houses that don't cash flow. I'm just telling you my perspective of what I'm doing. Even if it doesn't cash flow, if I get a $40,000 tax savings, that's a lot of money. And I'm gonna refinance it and keep this property for the long haul, and it's in a great area. The rent will go up and everything will cash flow as time goes on. And when they finally do lower rates, like they will lower rates again. I don't know when, but it will happen at some point. I can go refinance it, get a lower rate, and it will cash flow better at that point, right? Rents will probably have increased, the rate will go down, and now I'll have cash flow. So, it's something that I've realized just over the years now, being in the business for a while, that, there's a ton of properties that I've bought and I've kept for 3, 4, 5 years, and it's just like those properties have crushed it. They cash flow like crazy now because rents have gone up and I bought them at low prices. They've appreciated hundreds of thousands of dollars, all of them combined, millions of dollars. They've added millions of dollars to my net worth. And I've gotten a ton of tax savings along all those years by buying them. And so basically what I'm trying to say to everyone watching, if you've made it this far, shout out to you. Hit the subscribe button, hit the like button, do all that stuff because, you've made it this far in my continuous ramble. I don't even know if they're gonna edit this video. You should think about keeping properties at this very point in time, because it's never really made a lot of sense for us to keep these grade A, grade B properties, because the last 2 years what's happened is if I would have got that same house, I could have probably wholesaled it for 50K, I could have probably flipped it for 100K, and you look at it and you're like, well, if I could flip it for 100K, that's a lot of money. And yeah, I would get the tax savings by keeping it, but 100K is a lot of money, And so why do I wanna turn down 100K of cash today to keep it and, save taxes, but, also not cash flow at all? So we've always chose the flip and the wholesale for the last couple of years. But now, when the flip is up in the air for what it might make because people are uncertain of the market and the wholesale's not a lot, but you're still having a great property in a great area that's discounted, you should keep them. And that's exactly what I'm doing. We're still spending a ton of money to get deals. We're still buying flips. Like, I don't want to keep the houses in the crappy areas that are old. Like, I want good prime assets, but those still, ones that are going to make money, I will still buy them. I will still flip them. We will still wholesale them. That's cool. But I'm being very particular with the ones I want to keep in these areas because I know they're going to actually make me money this year at the tax savings, and I am going to hold them long term, and they're going to be worth a lot. So that is pretty much part of my real estate strategy the next 6 months. I think I'm going to accumulate a lot of rentals that are going to be great assets in the next 5 years, and I would encourage you guys to do the same. And if you want to get in-depth calls like this every week in our coaching program, highly suggest checking it out. Go to futureflipper.com, apply for a call with my team. It's completely free with the strategy session. We talk high level in depth like this all the time, and we got an upcoming event too that I would love to see you at with guys like Alex Hormozy, AJ Osborne, these people who've been on my podcast, 7 and 9 figure entrepreneurs. So go check it out. Would love to see you at the event, and hope you enjoyed this video. Peace.